A very good afternoon. You're watching the newsroom right here on ET Now. I am Ajay Sharma. The markets are looking perky today, but the advanced decline ratio seems to be suggesting that only the select pockets we are witnessing gains. Market was at day's high, but in the last 15-20 minutes has come down a bit. Just look at that donut on your screen. The advanced decline is just about 1:1. Let's see how it goes from here on. But I have somebody who's seen the market cycles quite closely, Mr. Shyamsunder, Bhat of Exide Life Insurance. Mr. Bhat, thank you very much for your time dropping by in our newsroom today. Let's get your thoughts on the market first, and then we'll come to specific areas. Do you think that there is kind of a floor now set in place in the market, the way you have observed it, the correction play out last 2 years?
Right. So thank you for having me here. Yes, it does appear that we've had a floor now set for the markets, especially the kind of floor that we saw when the corporate tax reduction was announced a few weeks back. We of course saw this big up move and then the market cooling off, and now we have seen a small recovery yet again. We think that we are in a waiting period now as far as the markets are concerned. What clearly will be the big monitorable will be the revival in demand on the consumer side in particular. And there is from the government and RBI's perspective, clearly there have been a lot of measures which have been taken over the last 1 month, which clearly will have their role play out as far as corporate earnings are concerned over the next few years. As far as consumer demand is concerned, yes, as I said, there's a waiting game, and clearly, if at all we do have anything on the personal income tax front, especially if it happens prior to the budget in terms of adoption of the direct tax code.
Put a lot of money in the hands of the people.
So I think clearly from the consumer sentiment perspective, corporate sentiment clearly has improved after the reduction in corporate tax rates. What remains is the consumer sentiment, and that clearly, psychologically, there'll be a big boost, even if it's not a very material change in taxation.
Mr. Bhat, last 72 hours, I would say, in fact, couple of weeks, PSUs have been in focus, be it PSU banks, or last 2-3 days, it's the oil PSUs which are in focus. How's your positioning on PSUs in your fund? Or even behind, outside of the fund? How do you see PSU? Do you see select value emerging, or the way government's focus is on it? What are your thoughts there?
So we have, it's not that we have classified, PSU as a theme to invest or not to invest. It's clearly very stock specific, even within the PSUs. I think clearly the big development which has happened recently has been the move to privatize in the genuine sense of profitable, strong profitable PSU companies, and this has been happening and after several years, the proposed privatization of this kind. I think from the signaling perspective, clearly it's a very, very strong signal being sent out in terms of the move to meet the disinvestment targets through a genuine privatization rather than having one PSU take over another. So clearly I think, and clearly from the value perspective, given what PSUs have gone through, and many of them for genuine reasons, because we've had, on the cash flow front or the profitability front also, many of the PSUs have not really done well. So to that extent also the stocks have been languishing. But yes, a value play clearly seems to be emerging, but very selectively. So I wouldn't really say PSU as a theme. But yes, I think more and more PSU stocks selectively will come into focus.
Okay. Mr. Bhat, what are your thoughts on will this quarter be the worst of the recent quarters? Do you think earnings will bottom out this quarter onwards, or too early to say that?
We have only seen a handful of numbers so far, so too early to say about how it will eventually pan out. But clearly the expectations are that it's not going to be a good quarter, obviously. So we are expecting a flat to negative kind of earnings growth for the Nifty. I think you will have the financial space clearly doing well, but sectors like automobiles and metals clearly will drag down the earnings. But I think this time around, unlike in the past few quarters where clearly the focus was on quarterly earnings, I think this time around, more than the quarterly earnings, it will be in terms of what I was mentioning earlier as to whether there can be something to stimulate consumer demand, which and primarily primary factor among that could be on personal income taxation. Given the fact that July and August have not been good for most of the corporates, and it's been put out in the media by many of the corporates, so while September has seen some recovery, clearly the July to September quarter is not really a quarter which investors or corporates are looking forward to while announcing their results. So I think it's more from the macro environment as to whether the demand stagnation or decline which we've seen, whether that is bottomed out.
Okay. But talking of insurance, that is one space which is witnessing a lot of buying. All the three stocks, SBI Life, HDFC Life, the Lombard, ICICI Lombard. Mr. Bhat, what are your thoughts? You belong to that industry. So I would just want your thoughts on understanding the industry.
Right.
Because a lot of institutional money is chasing that, all the three basket of stocks there. What are your thoughts on that one, the sex space?
So we are very positive on the insurance sector, and not just because I belong to the sector, but clearly we are seeing a very good direction for the sector. And the direction for the sector has turned clearly positive in the last couple of years when this entire movement from physical savings happened to financial savings. And insurance clearly is one of the sectors among them. Yes, within that, clearly we are seeing a shift. We are seeing more and more companies focusing on protection policies, which is clearly in the long-term benefit of the policyholder, given that the insurance cover for most of the people in India has not really been that high till a few years back when most companies started pushing protection. ULIPs clearly have their own role to play in terms of capital appreciation. So purely from the capital appreciation and the taxation perspective, ULIPs continue to offer a good option for investors along with the term plans or pure protection.
But Mr. Bhat, let's talk about oil and gas. First this government actually in a way deregulated fuel, and the first leg of re-rating of OMCs happened. Now the second leg probably is happening because they're in talks with global players. In general, we are seeing global companies interested in Indian oil and gas assets. We saw Adani and Total deal. Right. What are your thoughts in all the entire value chain, be it OMCs, LNG assets, GAIL, there's talk of Brookfield coming in over there. Your thoughts?
So we are positive on the oil and gas sector. So we are broadly neutral as far as the Nifty weights are concerned on the oil and gas sector. And as I said earlier, this particular move in terms of genuine privatization of the oil marketing major clearly is a very big directional move. So while we've already had foreign interest in some of the other downstream companies, interest in a mainstream company like this also gives an indication that deregulation frankly is here to stay. There have been times in the past where there have been doubts expressed in temporary phases of the year when in terms of the deregulation aspect. So I think that will also set it to rest. So clearly it will become, and we've always seen in terms of multiples which stocks get, any sector which has its profits capped by any kind of regulation tends to have a lower multiple, because investors don't really want to pay excessively for any sector where there is a regulation which will cap the profitability. So once that goes away, clearly in terms of the rating itself, you would have the Indian companies rated possibly at par with their other Asian market, or other emerging economy peers where there is deregulation.
Okay, right. All right, Mr. Bhat, on that note, we'll let you go.
Okay.
Thank you so much for dropping by in our newsroom today.
Thank you.
That was Shyamsunder Bhat of Exide Life.